remember that sometimes we can have a feeling like we assume that when I said cash book, that means I only talk about the cash transactions. So how much cash in and cash out. This is not true. This is actually any money come to the business is come to the cash book. If any money going out from the business, we record on the cash book. So cash book is all about not only the cash, also the bank as well. So if any money you receive, doesn't matter in the form of cash or in the form of bank or check, for any way, any form you use or the customer use, they pay you as long as you receive the money. If you receive the money, that will come to the cash book. If you pay the money, that will go to the cash book. So cash book is all about money in and money out. So if we talk about how the cash book look like, so in cash book we have two sides. In cash book we have two sides. So in cash book we have a debit side and credit side. Cash book, debit side and the credit side. So the cash book have a debit side and the credit side. Debit side all about money in. Debit side all about money in. Money into the business. Debit side all about money into the business. On the other hand, credit side is all about money out from the business. So let me send a link to someone. Okay. All right. So debit side is all about money in. Credit side is all about money out from the business. So if I said the credit side is all about how much money actually paid out from the business. So money out from the business. Money paid out from the business. If any reason we receive the money, for any reason, if we receive the money, we record it on the cash book debit side. So money received, money received. And for any reason, if we paid out the money to the supplier or anyone, we record on the credit side, money paid. Now, in most of the case, we receive the money from our customer. Sometimes we receive the money from the bank as a bank interest, but most of the case, we received money from our customer. So we can say, well, okay, just give me a second. Someone waiting to join the lesson. Okay, so normally we receive the money from the customer. So customer paid. When customer paid money, we receive on the debit side of the cash book. When we paid to our supplier, so paid to the supplier, we record on the credit side. So this is the story about the cash book. If we receive the money for any reason, we record on the cash book debit side. If we paid the money for any reason, we record on the credit side. So this is our basic understanding. The next point we have, that is how are we going to record on the cash book debit side, on the credit side. So let's have a look. For example, on the cash book, we have a two column. On the cash book, we have two columns. One is for the bank and one is for the cash. So on the cash book, we have two columns. So one is for the bank and one is for the cash. So we have a column for the bank and we have a column for the cash. We have a column for the bank and we have a column for the cash. So if this is the case, if any money we receive in the form of cash, we record it on the cash column. If we received any money in the form of bank, we received on the bank column. On the other hand, on the credit side, we have the same thing. We have the cash column and we have the bank column. So if we paid money in the form of cash, we recorded on the cash column. If we paid through check or from the bank transfer, we record on the bank column. So what we understand from here, well, I think one student, he said he's not hearing properly. So I'll tell, check your settings. Check your settings. Five. All right. So, okay. So this is the way we can complete our cash book. So the first thing we need to understand, when we receive some money, this is on the cash book debit side. When you paid the money, it's on the credit side. When you receive in the form of cash, we record on the cash book debit side. When you receive in the form of bank, it's on the debit side, on the bank's column. So if this is on the cash column, bank on the bank column, doesn't matter, it is debit side or credit side. Receive, come to the debit side, payment to the credit side. This is our basic understanding. After that, another point we have to understand, that is, we have two types of customer. Very, very careful at this point. Very, very careful, because in cash book, we'll expect 20 to 25 marks in the exam. So if you are not very happy with the cash book, you might lose a lot of marks. In this chapter is one of the important chapter from the book. So expect 20 to 25 marks from this chapter. So let's have a look. The first thing we need to remember, how many types of customer we have? We have two types of customer. We have a cash customer and the credit customer. Cash customer. And we also have credit customer. So we have a cash customer and we have a credit customer. Now we already know the difference, the cash and credit. Cash customer means the customer, I don't know him before. So basically, the customer came to me, he buys something from me and he paid me immediately. So this one is cash customer. Try to understand very carefully, because if you don't understand this one, you'll be in trouble. The cash customer is the customer. I never had any transaction before. The customer came just to me, buy something from me and paid for that, end of the story. So cash customer, I never had any transaction before. On the other hand, the credit customer is the customer who buys something from me first, and after that I send the invoice, then he make the payment. So he buy before, so he purchase before, and after that I send the invoice and he make the payment. So that means, for example, he purchased on 1st of January 2020 and he paid on 1st of February 2020. So after 1 month. So that means when you receive the money here, let's say I receive £500 here on February, and I'm recording on the cash book debit side this 500. That means this transaction not for the February. This transaction come from the January. So very important to understand. I'll tell you why. Because there is a quotient for the VAT on the cash book. There is a quotient for the VAT on the cash book. How we treat the VAT. So when there is a cash customer, that means I don't know this customer before. So I never had any transaction before. So I have to split the VAT now. So when I make a sale, for example, if I make sale for £100 and out of 100, if my 20 is for VAT and 8 is for the net cash sale, so I'm going to say VAT is 20, I'm going to split the VAT here, and I'm going to keep 80 for the net. On the other hand, if there's a credit sale, I'm not going to split the VAT when the customer actually paid to me. For example, if I make a sale on January and if the customer paid to me in February, so I'm going to record this money on the month of February on my cash book. Because even though I make the sales on January, I didn't receive any money from the customer because it was a credit sale. So customer paid to me in February. So as soon as customer paid to me £500, for example, I record it on the cash book debit side. But remember, I'm not going to split the VAT this time because this sale is not belongs to the month of February. I make the sale on January, so before the February, and I already split the VAT the time I make the sale. So when the customer paid to me, I'm not going to pay VAT again to HMRC. Otherwise, it's going to be double because I already paid the VAT when I make the sale on January. On cash book, remember that only cash book, we only recorded the item when we actually received. When we actually received the money, we record it on that type on the cash book. For example, if you make a sales on January and if you receive the money from the customer on June, you do not record the money on the cash book until the June month is coming. On the January, you make the sale because you didn't receive any money. That was a credit sale. So on the month of June, when you receive the money, so on the month of June, you record on the cash book, not on the January. It's very, very important to understand. All right, so let's move on to one of the examples. So our basic understanding from the cash book is cash book have a two side, cash book debit side and cash book credit side. The next step is we need to understand how many types of sales we have. We have a credit sale, we have a cash sale. If there is a cash sale, we have to split the VAT. If there is a cash sale or cash purchase, we have to split the VAT. If there is a credit purchase or credit sale, we don't have to split the VAT because we already did it before. On the other hand, if we receive in the form of cash, we record on the cash column. If we receive in the form of bank, we record on the bank column. If these three understanding is clear for you, cash book will be very, very easy for you. Let's move on, have a look on of the example, and we see how we record it actually when you receive or when you pay. So let's move on to the example and have a look. Okay, so we have a first example, illustration number 1. In this illustration, we can see we have a cash book, and this cash book is cash book debit side. Cash book debit side. Can anyone tell me on the cash book debit side, is it money in or money out? So if I see the cash book debit side, does it mean the business receiving the money or paid the money? Is money in. Very well done, Evelyn. Very well done, Nehal. So is means the money is in. Money is in. So if the money is in, the people I have here, J. Jones, B. Kindly, bank interest is not the person, F. Federer, and I. Glue. These 4 persons, who are they? They are my customer or they are my supplier? Who are they? They are my customer because my supplier never paid to me, isn't it? I pay to my supplier. So if anyone paid money to me, they are of course my customer. Now I understand cash book debit side, money in, and of course they are my customer. Now I need to understand, do I have any credit customer or cash customer? So credit customer and cash customer, I have to identify them. Why? Because if there is a cash customer, I have to split the VAT. If there is a credit customer, I'm not going to split the VAT. I'm not going to pay the VAT again to HMRC because I already paid this one before. So I'm going to find it out which one is a cash and which one is a credit. Let's have a look. How do I identify that? The first one I have here, J. Jones. J. Jones paid to me £600 cash. Remember that when I said £600, actually he paid. Cash book means is done. Very, very careful. Cash book doesn't mean it's pending. Cash book means is done. Money is already paid. Money is already received. Cash book means is actually done. Nothing is pending. So J. Jones, £600. He paid me cash. So as he paid me cash, and I can see this on the cash sale column, that is my cash sale. So if it is my cash sale £600, and inside of the £600 there is a portion of VAT. How much is the VAT? £100. So £100 is for the HMRC, and £500 is for my sale, is for me, because I never paid VAT for that before. So I have to split the VAT. When I make a sales to the customer, I take money with the VAT, including VAT. So all the money I cannot keep for myself. All the money is not for me. Some money is for the VAT, for the HMRC. So I have to split it. So what is my money will come to the cash sale column. The money for the VAT for the HMRC will go to the VAT column. And this is a cash sale. Remember that some students, they got confused. They think if the money come by cash, this is a cash customer. If the money come by bank, it's a credit customer. This is not true. The credit customer can pay you. The credit customer can pay you cash. The credit customer can pay you cash. On the other hand, the cash customer, they can pay you bank. So it doesn't matter the customer need to pay you cash or credit. The credit customer can pay you cash, and the cash customer can pay you by bank. So that's not a problem. So split the VAT. The next one we have Be Kindly. Be Kindly paid to me £800 on the bank, and here's my trade receivables. Trade receivables means the credit customer, isn't it? Trade receivables means sales ledger control. Trade receivables means sales ledger control. Is a credit customer balance. So this person was my credit customer, and this is the reason all the money I'll keep for myself. I'm not going to split the VAT. I am not going to split the VAT. Why? Because I already paid the VAT before. So when there is a credit customer, I don't pay the VAT before. So I already paid the VAT before. When there's a credit customer, I'm not going to split the VAT again, because this sales is not for this month. I'm receiving the money right now, but the sales I made before, maybe 3 months before, 4 months before. So I'm not going to make the VAT payment again, because this VAT already paid before. So all the money customer paying to me now is for me. The next one is a bank interest. So this one is not a customer. So I receive on the bank £100. That's for the sundry. Sundry means I don't want to make a separate column for something. It's a small income or a small expenses. I keep on the sundry column. The next one we have F Federer. F Federer. The F Federer I have £1,200. F Federer £1,200 I receive on the bank. And I can see this is a trade receivable. That means it's a credit customer. So I'm not going to split the VAT again, because I already done the VAT before. So the VAT will be empty and all money belongs to me. The last one I have iGlue. iGlue is another customer who paid to me £300 cash. And I can see that's my cash sale. So if there is a cash sale, I have to split the VAT, because I never paid VAT before. I never knew this person before. I never had any transaction with this customer before. So I have to split the VAT and I have to give the VAT to HMRC. So I want to keep my VAT separate and my sales separate. So out of £300, £50 for the VAT, £250 for the cash sale. So you can see that's how we need to split. That's how we need to split our cash and credit transaction based on what type of customer they paid to us. So this is a cash book, debit side. This is just an example. Let's move on to the cash book credit side, and let's talk about the same thing again. This time we have a cash book credit side. Now this time, is it money in or money out from the business? This time money in or money out from the business? So this time money out from the business. Money out, that means we make a payment. We make a payment. Now we can have a look here. Mole and Co, Adams, Polly, Oscar, and Fisher. Who are these people? They're my customer or they're my supplier? Who are these people? They are my supplier. Very, very well done. Very well done, Tahmina. They are my supplier. That's true. Yes. Very well done, Evelyn. They are my supplier. Yes. So because I'm paying to my supplier, I never pay to my customer. So they are my supplier. Okay, my next question is what type of supplier they are, cash or credit? If they are my cash, I have to split the VAT. If they're my credit supplier, I'm not going to split the VAT. Let's have a look at the first one, Mole & Co. So Mole & Co, I paid £200 from the bank, and they're not my supplier at all, so I paid for the sundry. They're not my credit, they're not my cash, they're the sundry, so I don't have to worry about it. If there's a sundry, it go to the sundry. Then Adams, I paid £360 to Adams cash. I paid £360 to Adam cash. Now I can see this is a cash purchase. So I never had any transaction with this supplier before. This is my cash purchase. Obviously, if this is a cash purchase, I have to split the VAT. So I split the VAT, 60 for the VAT, 300 for the cash purchase, because this VAT I'm going to claim back from HMRC. So I have to keep the VAT separate. The next one, I have Polly. I paid £3,000 to Polly from my bank account. And I can see this is a trade payable. Trade payables means credit supplier. Trade payables means credit supplier. That means I'm not going to split the VAT because this is my credit supplier. I already purchased this thing before. Now I make the payment. So basically, maybe on January, I purchase from the supplier and I'm paying on June. So I already spread the VAT here. I'm not going to do it here again. So I don't have to worry about the VAT. Then Fisher, £90 I paid cash. And I can see it's a cash purchase. So if it's a cash purchase, I have to split the VAT. So I can see VAT is 15 and 75 for the actual purchase. And VAT I'm going to claim back. So I'm going to separate the VAT. And actually I paid 90. So that's how we can complete the cash book credit side. So we understand now the cash book have a debit side and the credit side. If money in cash book debit side, money out cash book credit side, and we have to identify is it a cash transaction or it is a credit transaction. If there is a cash transaction, split the VAT. Credit transaction, don't split the VAT because this transaction come from the previous month. All right, so let's have a look. The combined cash book, how does it look like together? So normally when you will be working in a company or in industry or anywhere, the cash book you're going to maintain like this. So your cash book will be debit side and the credit side. It's not going to be like you keep debit side in one Excel file and the credit side on the another Excel file. You don't do that. So you keep the one cash book on the debit side and the credit side. So it's on the same file. Left hand side is the debit side and the right hand side is the credit side. We have the same story. So that's the left hand side is the debit, right hand side is credit. After that, you make all the total and you could find the balance. You can find the balance. The balance means, for example, if my cash book debit side, cash column. So if my cash book debit side, cash column, debit side is £100, and if my cash book credit side, cash column is £50, what does that mean? That means I received £100 cash and I paid £50 cash. And if the question asks me how much is the cash balance left over, how much is the cash balance we have, we can easily do that by minusing the credit from the debit. We can say the cash we have received, that is 100 from the debit side, and the cash we paid 50 from the credit side. So our cash balance remaining is £50. On the other hand, if the question asks you how much is the bank balance left over, we're going to do the same way. We'll see bank debit side and the bank credit side. So let's say for this question, we have a bank 3,000 debit and we have a bank 7,000 credit. Now you received £3,000 and you paid £7,000. What does that mean? That means you paid more than you received, isn't it? You paid more than you have. That means you end up with the overdraft, isn't it? So you end up with the minus 4,000. So you end up with 4,000 overdraft. Remember that bank balance could go to minus, bank balance could go to negative balance. Yes, Evelyn. So bank balance could go to minus, but the cash balance cannot go to minus. Remember that if you have a cash balance and if your answer is give you the negative figure, that means it is wrong, because cash balance cannot be minus. You cannot spend more than you have, isn't it? For example, if I give you £100 and if I ask you to spend, you can spend maximum £100. You cannot spend more than 100. So the cash balance is the balance you can spend maximum. So cash balance can go to up to 0, but it cannot be minus because you cannot spend more than you have. You cannot pay more than you have. On the other hand, the bank balance can go to minus. The bank balance could go up to minus because you can end up with the bank overdraft. You can end up with the bank overdraft, so bank could go to minus. So if you find the answer and that is a negative balance, don't be afraid or don't be like worried like why it is a minus. It could go to minus. All right, so let's move on to one of the questions. Let's see if we can do it. There is a lot of explanation here. You can read yourself. That will help you understand more. Okay, so let's do this question. Activity 1, cash book debit side. Activity 1, cash book debit side. Says there are 4 receipts. There are 4 receipts, so you received 4 payment to be entered in the debit side of the cash book during 1 week. So in this week, you have received 4 payment. Now, as soon as I see the word receipt, 4 payment, and obviously even the question don't say is it debit or credit. We understand if we receive the money, we're going to include on the debit side of the cash book. So you understand it anyway. Let's have a look at that. Cash sale listing. On the cash sale listing, this is my cash sale. So I make a cash sale and I receive this money. So I receive from Bumble total £600, and out of the £600, 500 for the net and 100 for the VAT. For Ryan, I have received 168 and 140 for the net and 28 for the VAT. On the other hand, we have a trade receivables, that is a credit customer. So from the credit customer, I receive check. Credit customer paid by check. Credit customer paid by check. So they are my credit customer. If there is a credit customer, no VAT, because this is not the sale for this month. This sale for the previous period. So AAT, they paid to me £425, and Ellen, he paid to me 5,600. So I have to record this 4 payment on my cash book debit side. Remember that if the customer paid to you by check, money come to the bank column. If the customer paid to you by check, money comes to the bank column. Okay, let's start with the first one. Let's do everyone together. Let's do the Bumble. Bumble. How much I'm going to write on the cash column? 600. So on the cash column, remember we always record the total amount. Tahmina, not 500. I have received total £600. So total amount I'm going to record on the cash book, debit side on the cash column. So I have received total £600. Now, my next question is, am I going to split the VAT or not? This is our cash sale. So cash sale, the answer is yes. Why? Because I never paid VAT for that. If I keep all the money for me, 600, HMRC will not be happy. HMRC will tell me, listen, this is your cash sale. This transaction just happened immediately. You never paid VAT for that. Can you pay my VAT? So I need to pay the VAT. Otherwise, HMRC will be very upset. And we cannot do the business if HMRC is upset. We need to make sure HMRC is happy always. So out of 600, 100 for the VAT and 500 for me for cash sale. So 500 for me, that is cash sale, and £100 is for the VAT. The next one we have Ryan. Ryan, we have received total 168, same story. VAT is 28, and for us it is 140. So this is it for our cash book debit side for the cash transaction. Now we'll move to the trade receivables. Trade receivables means sales ledger control, credit customer balance, who paid to us by check. So let's talk about the first one, AET. AAT, he paid to me 425. My question is, which column I'm going to write 425, cash or bank? I'm going to record on the bank column. Very well done, Sharon. Very well done, Sadia. Yes, we're going to record on the bank column because if the customer paid by check, money come to the bank column. So I'm recording on the bank column. That is 425. 425. All right. And my next question is, am I going to split the VAT for AAT or not? I'm not going to split the VAT. I'm not going to give any VAT for the trade receivables because I already paid the VAT. This transaction just didn't happen now. This transaction from the previous period. So all the money customer paying is for me. I'm going to keep everything. I already paid VAT before for that. Then the next one I have Eileen. 5,600, same thing on the bank, and all the money for me, for my business, no VAT. That's all for our cash book debit side. So if you are the person who will be in charge for updating the cash book, that's how you can keep your cash book up to date on the debit side. But there's a lot of example left. We're going to do everything. Hopefully it will be very, very clear. Okay, so let's move on to our next question, activity 2. This time we talk about cash book credit side. This time we are talking about cash book credit side. Cash book credit side means the payment. This time these people are my supplier. So we have a cash purchase and we have a credit purchase, trade payables. So let's do that. We don't have to explain too much. We already know how to do it. Let's do it the first one. Daniel. Okay, Daniel, how much I'm going to write and which column? Daniel, I have paid total 156 and 130 for the net and 26 for the VAT. I'm going to write, yes, I'm going to write 156 on the cash column. Very well done. And my next question is, am I going to split the VAT or not? Yes, we're going to split the VAT because this is a cash transaction, cash sale. I never paid VAT for that. I never split the VAT for that. I have to split it because I'm going to claim this VAT back from HMRC. So the VAT is 26 and the actual purchase is, it will go to the cash purchase column, that is 130. Very well done. Then we have Edgar. Edgar, we have 576. The VAT is 96 and the net is 480. All right, so cash transaction is done. The next one we have trade payable, that is credit supplier. Graham, we paid to Graham 150 by check. Which column I'm going to write 150? We're going to write on the bank column. Very well done, Fatma. We're going to write on the bank column 150. And am I going to split the VAT for that? No, I'm not going to split the VAT. No VAT. And all 150 I paid, that will go to the supplier. Then I have Isaac. I paid £300 check from the bank, and this is also trade payable, no VAT. That's it. So that's how we can prepare that. So this is the step by step. So we have done the cash book debit side and the credit side as well. Obviously, we're going to see how to do it together. So let's find the example to how to do it together. Now we have some idea how to prepare the cash book, and we want to see what else we can do. There is some cross-costing as well. You can read this. This is not very difficult thing. You can do yourself. We will move to the question that will be in the exam. So let's have a look one of the exam types question. So we have this question, activity 4. This is one of the exam type question. You will see this type of question in the exam. Maintaining and using the cash book. There are 5 payments. There are 5 payments to be entered in the Jeremy Jackson cash book. So there are 5 payments. When there's a payment, it will go to the cash book credit side. We know it. Now we can see there is a receipt. This receipt means when you pay to the supplier and to the seller, they give you a small paper, the receipt. This call is receipt. This is not received. This is a receipt. This is not received. This is the receipt. So when you pay, for example, if you go to Tesco, if you buy something, let's say you buy a bottle of water and you paid the money, and they will give you the receipt and say like, thank you very much. And on the receipt, you say you buy a water bottle, thank you very much for buying. So this is the same story. Receipt 1, 2, and 3. So you paid for 3 transactions and you got the receipt. So it says received cash with thanks for goods purchase or good brought. So they said, thank you very much for shopping from us. This is the receipt for you. We have 3 receipts. So that means we have paid for 3 transactions. Now our question is, we need to identify, is it a cash transaction or it is a credit transaction? So let's have a look at that. From Jeremy Jackson, a customer without a credit account. A customer without a credit account. That means this customer don't have a credit account with me. What does that mean, credit account? Credit account means like if you buy from me, you have to pay me immediately. For example, let's say Banu decided to buy 500 laptop or 500 computer from Dell. So Banu ordered 500 laptop from his company to the Dell, and Dell said, thank you for your order, Banu, but I cannot send you the product until you make the payment because we don't have any credit agreement. So we don't have any credit account. That means I'm not going to send you the product until you paid me actually. I'm not going to send you the product until you paid me actually. Now, obviously, maybe it's happened the supplier and the customer don't have the long-term relationship. So supplier don't have enough trust on the customer. So credit account created after a certain transaction. So when a customer keep buying from the same supplier, after a certain time, the supplier gives them the credit account. So you can buy earlier, you can buy now, and you can pay later. So if you don't have the credit account, that means you have to pay now. So it will be treated as a cash customer or cash supplier. So Jeremy Jackson customer without a credit account. So you understand this is a cash transaction. The next one again, Jeremy Jackson, a credit customer without a credit account. So a customer without credit account. This one also without credit account. That means all these three payments I paid to my supplier will be treated as a cash transaction because without credit account. So this one is clear for us. The next one is, we can see the VAT. This one is already VAT splitted. So total is 192, 32 is the VAT, 160 is the net. So this is very clear for us. There is no problem. The next one is also clear. The VAT is already separated. And the last one have no VAT. Remember, if there is no VAT, we don't have to worry about the VAT. Even though this is a cash transaction, but there is no VAT, what we can do? If there is a cash transaction, if the question said there is no VAT, you don't have to worry about the VAT. No VAT means ignore the VAT. All right, so this 3 is done. We have 2 more transactions. Let's have a look. There is 2 more payment. So we can see here, the next payment we have here, payment from the check. I paid by check. So this one is purchase ledger account. That means this is a credit account. Purchase ledger is a credit purchase. Purchase ledger is a credit purchase, credit supplier. So this one is a credit account, 3,000. So I don't have to worry about the VAT, no VAT, because it's a credit purchase. On the other hand, we have a Sure Motors. This too I paid from the bank, check. This too I paid from the bank, so check. We have no credit account with this supplier. The question said we have no credit account. That means it is a cash transaction. Cash transaction. And if it is a cash transaction, you have to split the VAT. They said 96 including VAT. So the VAT is inside. Inside of the 96, they said there is a VAT. So how much will be the VAT inside? How we can take out the VAT? How did we get the VAT? How much VAT inside of the 96? How do you get it? Can anyone remember that? Very well done. Yes, divide by 6. Very well done, Sadia. Yes, we divide by 6. If the VAT is including, if the VAT is inside, we always divide by 6. All right, so the question is clear for us. Now we want to write it down, this information in the corner, because if we scroll down, we don't see all the question. So let's write it down. The first one, E-franc. So I'm going to write net, VAT, and gross, or total. So I'm going to write E-franc. So net is 160, VAT is 32, and 192. Then we have G Jacob, 320, 64, 384. Then you have I Knight. There is no VAT. The net is only 450. That's it. So let's move on to the question now. This bit we can see together. So that's not a problem. Okay, let's do this question together. So the first thing we can see here, we have opening balance, balance BF. That means we have some money at the beginning. So at the beginning of the period, at the beginning of the month, we have some money, £6,600 we already have in the bank. So that's fine. We can have always some money in the bank. There's opening balance. Opening balance is the balance that comes from the last period, from the last year, so from the last month. So we already know it. Balance BF or balance BD means the opening balance that comes from the balance CD. All right, so the next thing we're going to see here, how I'm going to record all of this. Start from this E-franc. E-franc without credit account. So E-franc, cash transaction, cash paid to the supplier. How much I'm going to write and which column? How much I'm going to write and which column I'm going to write? I'm going to write 192 on the cash column. Very well done. 192 I'm going to write on the cash column. Very, very good. My next question is, am I going to split the VAT or not? Am I going to split the VAT for E-franc? The answer is yes. Very well done, Seppi. Yes, we're going to split the VAT because it's a cash transaction. I never paid VAT for that. I'm going to split the VAT. VAT is 32 and the net 160. Which column I'm going to write? Net, trade payable, cash purchase, or motor expense. Which column I'm going to write that? Cash purchase. So the cash purchase, actual cash purchase, the net amount is 160. 160. And this for the actual cash purchase. Because this 32, I'll get it back, isn't it? So that's not my actual expense. The next one we have G Jacob. G Jacob. And the G Jacob we can see we paid total 384. And the VAT is 64. And for the cash purchase 320. Then I Knight 450, and this one 450, there is no VAT. The question said there is no VAT. I don't have to worry about the VAT. All right. Now we move to the bank. Check stub. Checkbook stub means payment from the bank. If you make a payment by your checkbook, money will go from your bank. Remember that. If you make a payment to your supplier by using the checkbook, so money will go from your bank, not from the cash. So the first one we can see here, Pollard. Pollard. How much I'm going to write and which column? 3,000 I'm going to write, and which column I'm going to write, cash or bank? 3,000 on the bank column. Very well done, Muriel, very well done, Sadia. So 3,000 we're going to write on the bank column. Very well done. Then which column I'm going to move it? Trade payable, cash purchase, or motor expense? Which column I'm going to take this one? Trade payable. And there will be no VAT because it's our credit purchase. There will be no VAT for that. Then we have the next one, Sure Motors. Sure Motors, we paid £96 including VAT. So £96, which column I'm going to write it? Bank or cash? Bank column, because paid from check. For either it is paid from check. If you paid by check, money will go from the bank. So we'll write it down on the bank column. That is £96. My next question is, am I going to split the VAT or not? Very good. We're going to split the VAT. Remember that it doesn't matter we pay by bank, doesn't matter we paid from the bank, but this is a cash transaction, no credit account. So we don't consider money paid from the bank or cash. We consider, is it a cash transaction or it is a credit transaction? Cash transaction, split the VAT. Credit transaction, don't split the VAT. So we need to remember that. Doesn't matter you pay by cash or you receive cash, pay by bank, receive bank, doesn't matter. So the VAT is, how much is the VAT here? 96, 16 pound. Okay, so 16 is the VAT. And how much is the actual motor expense? How much is the net? 80. Very good. All right, so after that, all you need to do, we need to make a total. We need to make a total of the cash column. So let's start with that cash column. How much total cash we have received? Make a add of that, 192 plus 384 plus 450. How much it is? How much total cash we have received? 1026. Very well done. Then we're going to add the bank column. Remember, when you add the bank column, always take the opening balance as well, because this money you already had at the beginning of the month. So your total money will be on the bank. How much? Whatever you already had and how much you received. So that will be total. 9696. Okay. How much is the total VAT? 112. Thank you, Tamir. 112. And then we have a trade payable. This is 3,000 anyway. So 3,000. And cash purchase. How much is the cash purchase? 930. Okay, good. And our motor expense 80. So from here, all we need to remember, our cash and bank balance because we need it. Cash and bank balance will be very, very important because in the exam, they'll ask you at the end, how much is the cash balance and how much is the bank balance. So let's write it down this. We have a cash balance, our total cash balance we have on the credit side. Remember that credit side, that's the payment. credit side, we paid total 1026, and from the bank, total we have paid 9696. So from the cash, we paid 1026, and from the bank, we have paid 9696. Okay. So let's have a look. Now, what is the rest of the question said? So our cash book credit side is now up to date. Now we'll look the cash book debit side. So here we all the money we have paid to the supplier, or for some other reason we paid. That's why it's come to the cash book credit side. Now we're going to see how much actually we received. So let's have a look at that. All right. We can see all of this here. So here we can see they said there are two automated receipts. There are two automated receipts from credit customer to be entered in the Jeremy Jackson cash book. So what does that mean, automated? Automated means the money received by bank. So automated means the money is transferred from the bank. So we receive on our bank account. If you receive something cash, this is not automated, because cash is received physically. One person give it to another person. It's a physical transaction. But when the question said is automated or automatic, that means the money come to your account automatically. So that means the money transfer to your bank account. So we have received from the two credit customer. The question already said two credit customer. We don't have to worry about the VAT, because the question already mentioned is a credit customer, so we know there is no VAT. From K. Ronald, we have received 683, and from L. Bloodwin, we received 476. So let's have a look at that. So we're going to write K. Rowland. We received 683 on the bank column, 683 on the trade receivables, because the money came to the bank. Then we're going to write L. Bloodwin, that is 476, and 476 is the trade receivables. Now on the cash, we didn't receive any cash, so this is the only cash we have, 1256. How much is the bank here? If we added that bank, 683 plus 476, 1159. Very well done, Sharon. So 1159, 59, that is 1159 as well. That's our cash book debit side. This is the money we have received, and this is the money we have paid. That was the credit side. And now the debit side is cash is 1159. 1259 is the cash, 1256, and the bank is 1159. Now, if I ask you how much money we have cash, can anyone tell me how much cash balance we have left over? So the cash book debit side is 1256 minus the cash book credit side is 1026. That is 230. Very well done, Nehal. And if I tell you how much is the bank balance, so the cash book debit side we have 1159, and the cash book credit side 9696. That is minus 8537 credit. Very well done. 8537. Very, very good. So let's move on to the next question. Let's see what they're asking from us. Okay, so the next question is asking here, using your answer A and B, calculate the cash balance. So how much will be the cash balance here? We already know it, isn't it? You already calculate that. So they're asking for the cash balance. You already got it. That is 230. And they're asking, using your answer A and B above, calculate the bank balance. Use minus sign if your calculation indicates an overdrawn bank balance. So if they said if the bank is overdraft, then use the minus sign. So you're going to use the minus sign. Now, how much was the balance for the bank? 8537. Very well done, Nehal. Okay. And the final question is, will the bank balance calculated in D is a debit balance or credit balance? This is our credit balance. Remember that it is from our point of view, from the business point of view. It is not from the bank point of view. Because if bank said it is a credit, that means this is your money. But when you said credit, this is a liability. Very, very careful. All right. Any question from here so far from the cash book? Anyone have anything? Your mind, you can ask me. Anything not clear yet about the cash book? Before we move to the next topic. No? Okay. Do we always minus bank from cash? We don't minus bank from cash, do we? We minus from the cash column to cash and bank to bank. Yeah, so we have the debit side of the cash column, you minus credit column of the cash. So debit side of the cash column minus credit side of the cash column. And the debit side of the bank column, credit side of the bank column you minus. We don't do minus from the bank to cash. Okay, so let's move on to our posting. Posting to the general ledger. Let's have a look. There's a lot of explanation example here. You can read yourself. That will help you to understand a lot. But we will do it on the next chapter. The posting. So let's have a look. The posting. Okay. Combine. Is there anything here to discuss? All right, so this is not very relevant. Let's move on to the next chapter. Chapter number 9. In chapter number 9, we're going to see the posting. There's a lot of example at the back of the question, back of the chapter. Make sure you practice all of this. If you're stuck anywhere, you can email me and I'll definitely explain to you. Okay, double entry for sales and trade receivables. Chapter number 9. Double entry for sales and trade receivables. So trade receivables means the credit customer. So what is a double entry? Double entry means dual entry, isn't it? Double entry means debit and credit. So let's have a look what they're asking from here. Okay, we already remember that. Dead and click. So dead and click, debit and credit. When the asset and the expense and the drawings is increasing, then it is debit. When the liability, income and capital is increasing, then it is credit. We already know our dead and click. So if you don't remember that, make sure you revise your chapter number 6 and 7, the class you have done last week. Very, very important to identify debit and credit. So dead and click always help you to identify what is debit and what is credit. All right, let's move on. They said a recap of the double entry. Okay, a recap of the T account. We already know this thing, the T account. There's nothing we need to do it here. Let's do one of the example. Sales ledger control. This one we already done it before. VAT control. Okay, we'll do that anyway. So let's do that. Double entry, activity 1, VAT and double entry. VAT and the double entry. Now the VAT is only come when the business is VAT registered. Remember that if the business is not registered for VAT, we we don't have to worry about VAT, because only we worry about the VAT when the business is VAT registered. We can see here a business which is not registered for the VAT, a business which is not registered for VAT, sell good on credit £100. So sales on credit, sales on credit. So when there is a sales on credit, what is the journal? When there is a sales on credit, sell on credit, sell on credit. So sale is income, isn't it? Sale is income. Sale is income. So when I make a sale, my sale goes up. If my sale goes up, my income goes up. And if my income goes up, my click also goes up. So dead and click. So click, C-L-I-C. So I is income. My income also go up. And if my income goes up, that's my credit. Sales is a credit. On the other hand, when I make a credit sale, I create sales ledger control, that is credit customer. So when I make a credit sale, for example, if I make a sale to Evelina and Evelina said, I'll pay you later. So when Evelina said, I'll pay you later, I have a name for Evelina. I said, Evelina, from today, you are my sales ledger control. You are my asset, because you're going to pay some money in future. So you are my asset. And if you are my asset, you are my debit. If you are my asset, you are my debit. And I have a name for you. The name is sales ledger control. Very well done, everyone. Thank you very much. All of you remember that. So sales ledger control, this is our debit, because this is an asset. An asset is increasing. And the VAT is not registered for the VAT. The business is not registered for the VAT, so you don't have to worry about VAT. So you just said sales ledger control, the amount is £100, that is debit, and sales is income, that is £100, that is credit. This one we already done before, but just quickly review, because we have to do some tricky question. We need to make sure we still remember the debit and credit. Okay, let's move on to the next one. Number B. Number B is asking a business which is registered sell goods, so which is registered, so which is VAT registered. So now they said they give us a question. Now the VAT registered business. So this time the business is VAT registered and they sell goods on credit, 100 plus VAT. What will be the journal for that? So sales on credit, £100 plus VAT. So what will be the journal for that? If there is a VAT with the credit sale, so VAT will be added, isn't it? Now, Zia, the sales ledger control is the total amount you're going to charge the customer, isn't it? Sales ledger control is the total amount you're going to charge to customer. So you want the full amount from the customer. So you're going to charge the full amount to the customer, but you will separate the VAT. It's not you. You said your customer, give me my money and give the VAT to HMRC. No, you don't do that. You charge to the customer with the VAT. So you tell the customer, can I have the net plus VAT? So you take all the money and you keep your one as a net and the VAT goes to HMRC. So you said sales ledger control, this time asset, sales ledger control is 120 because 20% is the VAT. So 100 plus 20 is 120. Sales ledger control is debit, that is 120. Now out of 120, all money is not for you, isn't it? All money is not for you. So £20 for the VAT. So VAT is credit, it's £20. Why VAT is credit? Because when you make a sale, you create the liability. When you make a sale, you create the liability. You have to pay the VAT to HMRC because VAT is not for you. Even though you're collecting from the customer, but this money is not belongs to you. This is not your money. You're collecting on behalf of the HMRC. And you're collecting from the customer, so you have to pay it back to HMRC. This is your liability. So £20 is the credit, is the liability, and the net is the sales. How much is your actual sale? That is credit, £100. So out of 120, £20 for the HMRC, 100 for you. So 100 for your actual sale and 20 for the VAT, but you charging 120 to the customer, not 100. Very well done. Okay, the next one, number C. A business which is VAT registered sell good for cash, 100 plus VAT. This time the customer paid you immediately. This time the customer paid to you immediately. So the customer is not your credit customer. It's not like he's going to pay you later on. You said you are my asset, you are my sales ledger control. No. This time customer paid to you immediately cash. So what will be the journal for that? What will be the journal for that? This time I'm not creating any credit customer. This time cash is coming. So cash is the asset. So I'm going to say cash is the asset. So cash is a debit, 120. I'm receiving 120 from the customer. And out of 120, same thing, VAT credit 20 and sales credit 100. Only the sales ledger changed to cash because this time the customer paid to me immediately. So I don't have to tell him you are my sales ledger control and you are my asset. I don't have to tell it because customer paid to me immediately. So cash is coming. I'm happy with that. All right, so let's move on. So posting to the sales daybook, posting to sales daybook. Now, what does that mean? Posting to sales daybook. Okay, so we have a different type of book. If you remember your chapter number 1, so we have a different type of book of prime entry. We have a sales daybook, we have a purchase daybook, we have a sales return daybook, we have a purchase return daybook, we have a cash book. All this book we have, this is the book of prime entry. The book of prime entry means when you make a sale, you record somewhere. So when I make a sale, when I make a credit sale, I record on the cash book, on the sales daybook. When I make a credit purchase, I record on the purchase daybook. When I return to my supplier, to the credit supplier, I record on the purchase return daybook. When customer return to me, credit customer, I record on the sales return daybook. When I received money on the cash book debit side, when I paid money to the cash book credit side. So all this book I have to be very, very clear because from this book, so first I prepare the sales daybook, sales daybook. In sales daybook, I only record the credit sale. Please remember, I only record the credit sale. Credit sale. I only record the credit sale. Inside of the sales daybook, I do not record any cash sale. If there is a cash sale, I record to the cash book. If there is a cash sale, I record to the cash book. Only the credit sale, I record to the sales daybook. So, only the credit sale. On the same thing for the purchase daybook, if there is a credit purchase, I only record on the purchase daybook. If there is a return, if there is a credit sales return, I record on the sales return daybook. If there is a purchase return, I record on the purchase return daybook. Now, this is the first question. The next question is, after recording all of this on the sales daybook, when I make a credit sale, remember they are my asset. All the credit sale when I make to the customer, all my credit customer, they are my asset. So when they are my asset, I'm recording their name on the debit side. So all the customer balance, all the customer name for the credit sale will come to the debit side. On the other hand, if it is a credit purchase and purchase daybook, we record on the credit side. So customer is asset on the debit side and the supplier is a liability on the credit side. Once we recorded all of this, from here, we move all this information to the ledger account. So posting to GL. So from the sales daybook, we post all the information to the general ledger. We do for every single book. we do for the sales return day book, we do for our purchase day book, we do for the purchase return day book. So from the day book, from the sales day book or purchase day book, after that, once we completed this book, from here, all the information, the next step is to move to the general ledger. We'll see how we do that. So first step is recording all the information on the sales day book. Remember that this is a book of prime entry. Book of prime entry means this information never written anywhere before. So first time you're writing, you make a sale. You're recording the first time. So when you make a sale, for example, if I make a sales to Evelina, I'm writing on my sales day book, Evelina, 500 pounds. So I'm writing first time in a book. I never write anywhere before. This is called book of prime entry. And after writing the sales day book, after later on, I'm going to move all the information to the general ledger. Okay, let's have a look now. Shown below is a sales day book. Sales day book. Inside of the sales day book, all the people I have, they're my customer or they're my supplier. So inside of the sales day book, all the people I have here, all the people I have, Harris and So, Hall and Co, then G Limited, J Limited, they are my credit customer. They are my credit customer. Remember that they are my credit customer. They are not my cash customer, only credit customer. Then we have invoice number. So when you make a sales, we send invoice to the customer, isn't it? Customer paid after receiving the invoice. So when customer buys something from us, and after a certain period, we send a invoice to the customer and say, can you make the payment? And customer look at the invoice, if everything is correct, they make the payment. So there should be invoice number. Then we have a customer code. We know how to create the customer code. We did it before. So customer code will be here. And total, VAT, and net. Total means how much actually you're receiving from the customer. VAT, how much was the VAT inside? And how much is actually for us? How much is the net? So this three column has to be there. Total, VAT, and net. Okay, so the next one we can see here, posting to the general ledger. So once we have this information, we can see my total net is 612, that is 612. My total VAT is 12240, and my total is gross is 734. So I have this information now from the sales day book. So all the credit customer I have from the sales day book, together all the customer, we call them sales ledger control. Sales ledger control means all the credit customer I have inside of this account. If I said sales ledger control is 10,000, that means inside of the sales ledger control, I have a lot of customer, and all these customer are credit customer. So all the customer together, I call them sales ledger control. For example, if your manager asks you, how much is due from Hall and Co? So you open the sales day book, you said from them, the due is 105 pounds. If your manager asks you, how much is due from J3 Limited? You open the sales day book and you tell them the due is 309 pounds. But if your manager asks you, how much is due from all the customer? So you open the sales ledger control and you tell them 734. So you're going to see how to make the ledger account, general ledger account. So from the sales day book, how we post the information to the sales ledger and the general ledger. So let's have a look at that. So we can see here some more explanation. We don't need to read all of this. Let's do that. Activity 2, posting sales day book. This is my sales day book. From the sales day book, I'm posting the information to the sales ledger. Remember that we have two types of ledger. If you have a pen and paper, you can write it down, or you can remember that we have a sales ledger, and we have a general ledger. So sales ledger means the individual customer. So individual account. So when I said sales ledger, I'm talking about one customer. I'm talking about only one credit customer. For example, if I said Can I have the sales ledger for M head? Can I have the sales ledger for K-Tang? So I'm talking about only one customer. On the other hand, the general ledger, also called sales ledger control, SLC. As soon as I said sales ledger control, I'm talking about all the customer. So all credit customer account. So if my manager asks me how much is the due from M head, so I'm going to open the sales ledger, because sales ledger represent individual account, one customer account, separate customer account, one particular customer account, that is sales ledger. On the other hand, the sales ledger control is the general ledger. So this one represent all the credit customer. So if my manager want to know how much is it due from all the credit customer, we open sales ledger control. Because sometimes you might have a lot of customer. For example, if you think about British Gas, if you think about like the bank, Halifax or Lloyd's Bank, they have a lot of customers. Now, if your manager asks you, like if you work for a British Gas, if your manager asks you how much is due for this customer, how much is due from that customer, then you can open the sales ledger control. Now, you might have a 20,000, 50,000 customer. Now, if your manager asks you how much is due from all the customers, and if you want to add one by one sales ledger, then it will take a long time to tell how much is the total balance due. So you keep another account that will tell you the total balance from whole customer. So you open the sales ledger control. Sales ledger control, total credit customer, sales ledger only one customer. Okay, so let's talk about this one. Then on the bottom we can see here we have a general ledger. So the question asking me to record or posting the information. The first on they're asking to the sales ledger, that is here, sales ledger, and they said on the general ledger. So on the sales ledger, I'm going to record every single entry. On the sales ledger, I'm going to record every single entry because sales ledger is the individual account. So I'm going to write everyone name here. I'm going to write M head. I'm going to write G Evering. I'm going to write K Tang. And I'm going to write L Harvey. All they are my credit customer. How do I know all they are my credit customer? Because this is my sales day book. And on the sales day book, I only record the credit customer. They are my credit customer. How do I know that? Because it's a sales day book. On the sales day book, I record only the credit sale. So I'm writing all this customer name here. I'm going to take the total amount because I'm charging the total amount from the customer. Remember, I never charge net amount to the customer. I always charge to my customer with the VAT. I always charge to my customer with the VAT. I'm the one who is responsible to pay the VAT HMRC separately. So I always charge customer with the VAT. So I'm going to take the amount that is 3,600, that is 3,102, then 5,988. And 1,440, and all these people I have here, they are my credit customer. So is there my debit or they are my credit? Which side I'm going to take, debit or credit? All this credit customer, they are my what? They are my asset. They are my asset. And if they are my asset, they are my debit. So I'm going to tick debit, 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 debit. So you can see that if the question asks for the sales ledger, that means they're asking for the individual balance. How much is due for the particular customer? In this case, you have to take every single credit customer because they're asking for the sales ledger. Remember the word sales ledger, only one customer. Sales ledger, only one customer. And let's move on to the general ledger. So let's move on to the next one. That is general ledger. Let's write the total amount because we need the total amount. The total here we have 14,130. VAT we have total 2,355, and the net we have 11,775. So we move on. What will be the entry in the general ledger? So in the general ledger, we don't write anyone's name. Very, very careful. In the general ledger, we do not write anyone's name. This is the sales ledger control. This is the total balance. So how many customers we have? The total. And we call them sales ledger control. Sales ledger control is the total balance. How much is due from the total customer? So you're going to write here sales ledger control. Total due from the customer, that is 14,130. Then the VAT is 2335, and the sales, that is net 11,775. Okay, the next question is sales ledger control. It will be debit or credit? 14,130 sales ledger control. The first one, it will be debit or credit? That will be debit. This is my asset, isn't it? Same thing. That's my total asset. So I'm gonna say that's my debit. That's my asset. Very well done, Sharon. So this is my asset. The next one is VAT. What will be the VAT here? So I'm collecting the VAT from the customer. It will be debit or credit? That's my credit. So remember, when I make a sale, VAT is always credit. When I make a sale, so VAT is always credit because I'm collecting the VAT on behalf of HMRC. I have to pay the VAT back to HMRC. That's my liability. That's my credit. And the final one is the sales. Sales is income. This is my money actually. That's my net sale. What will be that? Debit or credit? That will be also our credit. Very well done. Because debit and credit has to be equal. Debit and credit always has to be equal. So if I added this to credit, it will be exactly equal to the debit. If I added this to, it will be exactly equal to 14,130. Remember, your debit side and the credit side always has to be equal. Debit side equal to credit side. If the debit side and the credit side doesn't match, that means there is some problem with that. So when you do the double entry, debit side and credit side has to be equal. All right. So any question from here so far from the posting? Any question from the posting before we move to posting the sales return day book? So you're going to see the sales return day book. We've done the sales day book. Now we're going to see the sales return day book. Now sales return day book is when the credit customer return to us. So when they buy, they're my asset. When they buy from us, they're my asset. So they're my debit. So when they buy from us, we sell, you are my debit. So you're my sales ledger control. So you are my asset, you are my debit. But when they return to me, I need to make sales ledger control credit because I need to make it down, isn't it? So I cannot say you are my asset. When I make a sale, and if I said, you are my asset, you're going to pay some money. But when they return to me, if I still say you are my asset, you are my debit, this person will not be happy. He will tell you, listen, I have returned to you the product I buy from you, so I'm not your asset anymore. I'm not your asset anymore, so I'm not going to pay to you. Can you remove my name from your system? I'm not your asset. So if you want to remove it, you make it credit. If something is debit, if you want to remove it, you make it credit because debit and credit is like a plus and minus. If you want to remove something, you make the opposite entry. If you do that, it will be removed automatically. So when there is a sales return day book, we need to do opposite. All right, we're going to see it. We're going to do it together, no problem. But before that, we'll take a break. And before you go to the break, make sure you write it down your full name for the attendance, because if you miss the attendance, you might not get the recorded video. So make sure you don't forget to write your name. You write your full name for the attendance so that you can have access to the video as a recorded lesson. So take a break now. I'm going to see you in 30 minutes time. So around 8 o'clock, we're going to come back. We're going to start from here, sales return day book. Welcome back. Let's start with our posting from the sales return day book. So we're going to see here how we're going to post if the information comes from the sales return day book. So let's have a look what we have in the sales return day book. On the sales return day book, we have the same information like a sales day book, but this time all the credit customer, they're going to return to us. So this time they are actually going to return to us. So it's not like we keep the record on the same book. Remember, when there is a sales, we record on the sales day book. When there is a credit sale, we record on the sales day book. But when there is a sales return, we don't record on the sales day book. We record on the sales return day book. We have a two different book, one for the sales day book for the credit sale, one for the sales return day book for the credit return from the customer. Okay, let's have a look at that. So what we have here, we can see here on the sales return day book, we have we have the date. The first column we have for the date, then we have the customer detail, we have a credit note number. When there is a return, there is a credit note. When there is a return, there is a credit note. We do not write the invoice number here, we write the credit note number because it's a return. Then the customer code, total, how much was the return, how much was the VAT inside, how much was the net. This is the story. Let's do one example, will be more clear after that. Let's move on to one of the example. All right, activity 3. Posting the sales return day book. Sales return day book. So this time all the credit customer, all the credit sales I have made or we have made from the business, the customer is going to return to us. For example, if you make 100 sales to 100 customer, out of 100 customer, maybe 3 or 4 customer or 5 customer, they always return to you. So when there is a return, you record it to the sales return day book. You don't delete this customer from the sales day book, rather you record on the sales return day book. So let's have a look how we record that. Sales return day book. So we can see here, there is two things again. From the sales return day book, we have sales ledger, that is the individual customer, and we'll also have the general ledger, that will be our total return. This is the general ledger, that will be the total return. All right, so let's do this one first. So this is the sales return day book, and all the people we have here, F. Fish, M. Gordon, G. Henry, and R. Left, all of these people, they were my credit customer, but they are now returning to me. That's why I'm going to record on the sales return day book. And I'm talking about the sales ledger, so I'm going to write every single one name separately. Sales return means, sales ledger means the individual transaction, individual customer. So I'm going to write their name. I'm going to write F. Fish. I'm going to write M. Gordon. I'm going to write G. Henry. And I'm going to write R. Left. That's all my credit customer, but this time they're returning to me. I'm writing the total amount, 504,276, 744, 696. When they return with the VAT. Remember that when I make a sale, I sell with the VAT, I collect the money with the VAT, but when they return, they also return with the VAT. So VAT need to be included. Now, my next question is, this time it's a sales return day book. So this time they will be my debit or they'll be my credit. This time they will not be my debit anymore. They'll be my credit because they are not my asset anymore because they're returning to me. I have to remove them. So before I said sales ledger debit, now I need to say sales ledger credit so that debit and credit cross each other. So if I sell to a customer, let's say if I make a sale to Nazia and I say Nazia is the debit because I make a credit sale to Nazia, but once Nazia return to me, I need to make Nazia credit. So debit and credit will offset each other. It's like a cross each other. It's like a plus and minus. So before it was debit, now I make a credit, that will be gone. So I'm going to click on the credit side for all these people because all these people return to me. All right, so let's do the general ledger now. So let's write the information first. The total amount we have here 2220, VAT 370, and the net sale is 1850. Okay, let's move to the general ledger. Okay, what will be the general ledger here? So this time I'm going to write the same thing, but I'm not going to write this time sales. I'm going to write sales return. This time net is my sales return. So sales return, the net, VAT, and the sales ledger control. So before it was sales was credit, VAT was credit, sales return was debit. This time sales ledger control was debit. This time the customer returning to me, so my sales will be changed to sales return. So sales will change to sales return. Before my sales was credit, now my sales return will be debit because it's a return, so that will reduce my sales. Before I said sales is £100, for example. Now I said sales return is £100. That was credit, that is debit. Debit and credit like a plus and minus, so it will cross each other. So I'm going to say sales return, the total amount 1850, that will be debit. VAT 370, VAT will be also debit, because if customer return to me, my liability to HMRC will be reduced. If customer return to me the product, I'm not going to pay VAT for that. So if the customer return to me, and if I pay or refund to the customer, I'm not going to pay VAT for that, because that wasn't my actual sale anymore, because customer returned to me. So I'm not going to pay VAT. So I'm going to make VAT this time debit. So that will reduce my liability. On the other hand, sales ledger control was before debit. I'm going to make sales ledger control 2220. This time I'm going to make credit, because this customer sales ledger control, this amount 2220, this amount I'm not going to get from the customer, because customer have returned to me, so I need to make it credit. Normally sales ledger control is debit. As soon as I make it credit, the balance will go down. For example, before my sales ledger control was 10,000 debit. If I make sales ledger control 2000 credit, so my new balance for the sales ledger control will be 8,000 debit. That means out of 10,000, £2,000 people not going to pay, or they return to me. So I'm going to minus that. My new balance will be 8,000 debit, because debit was 10,000 more, credit means minus, and the remaining debit will be 8,000. All right, let's move on to the next question. Okay, the next question we have, and that is posting to the cash book. For this three chapter, chapter 9, 10 and 11, for this three chapter, I'm going to send all of you a separate note, because that's going to be tricky to remember to every single posting from which book to posting. So I have a summary in one page, all the posting. I'm going to email all of you that, so that you can quickly revise before the exam, so that once you practice all of this, and for the revision purpose, you can keep on your hand, like from which book to how to post. That's going to be like your life will be very easy for that. So I'll send it to you maybe tonight or tomorrow. So hopefully like you can revise from that. On top of that, I'm going to send you another question bank. This is the course book, and I'm going to send you a question bank, the practice book. So from there, you can practice some questions. So that will be very helpful for the exam purpose. Okay, so have a look this one. Posting from the cash book debit side. Posting from the cash book debit side. Now here I want all of you to remember, this line. It's a book of prime entry. The reason I'm asking to remember that, the cash book is the only book that could be book of prime entry and could be part of general ledger. So cash book number 1, cash book CB is the cash book. Cash book could be book of prime entry, or also it can be part of general ledger. So if this is a book of prime entry, that means we never write it down anywhere. So we'll take every single entry. We take every single entry we have. Remember that. And if the question said this is a part of general ledger, part of GL, if the question said it is a part of general ledger, that time please ignore the cash and bank, because it's already taken when you record on the book of prime entry. So when I say the part of general ledger, that means it's already recorded. You don't have to take this two again. But if they said it is a book of prime entry, that means it's never written anywhere, never take anywhere, so you record everything. We'll do some practice anyway, but remember that. If the question said this is a book of prime entry, you take everything: cash, bank, VAT, trade receivables, cash sale, rental income, everything. But if the question said this is a book of part of general ledger, part of GL, then don't take cash and bank and take rest of the thing. Okay, let's have a look at that. They said how you transfer this information from the cash book debit side. Cash book debit side is all about money in, isn't it? So how much money you have received? Cash book debit side all about money received. Now we can see here what will be the entry in the general ledger. What will be the entry in the general ledger? GL, that's fine. So this is a book of prime entry. I'm going to take everything. The first thing I have here, cash. Cash and bank. Let's talk about cash and bank. Now cash book debit side money in. So money in, cash and bank. This two will be debit or credit. It's money in, so receiving the money. That's our asset. So cash and bank will be debit or credit? Cash and bank. Cash and bank, our asset. So as it is a debit side, that means money into the business, and that will be our debit. Very well done. Very well done, Tamir. So very well done, Amand. So that will be our debit. Now all of this we have here, VAT. Even though if we receive the VAT, but this VAT is not for us. VAT 600 we received, but VAT is not for us. VAT is the liability. So VAT will be always credit. VAT is always liability. Remember that. VAT is always liability and VAT is our credit. Because VAT, even though we receive from the customer, but it is not for us, we have to pay it back to HMRC. So this is our liability, so it will be always credit. On the other hand, trade receivables, that's the tricky one. Please remember all of that. Trade receivables, we have another name, the sales ledger control, because here they give sales ledger control. We remember sales ledger control. Sales ledger control. Now, this one, I want all of you to very carefully listen to me. Sales ledger control, 12,000. It will be debit or credit? Sales ledger control, posting from the cash book. Now, if you said debit or credit, I really don't mind, because I know you never done this one before. Some of you said debit, some of you said credit. This is not, I'm saying mistake, because we never done it before. Remember, if we take the information from the cash book debit side, your sales ledger control will be credit. Normally, sales ledger control is always debit. Normally, sales ledger control is always debit. But when you're posting from the cash book, remember that time sales ledger control will be credit. I'll tell you why. Why? Normally, my sales ledger control is debit. Let's say £1,000. That means I'm expecting £1,000 from my credit customer. I'm expecting £1,000 from my credit customer. That's why this is my debit. But when my customer paid to me, let's say the amount was due till today. Today, the customer paid to me. Sales ledger control, he paid to me £1,000. So today I need to make him credit, isn't it? Otherwise, he will be so angry. The customer will tell me, listen, I already paid. Don't call me I'm your debit. Don't call me I'm your asset. I already paid the money. Can you make me credit? Can you remove my name from your system? Because I'm not your asset anymore. So I'll say, okay, thank you very much. And how do I know you paid? And he tell me, can you check your cash book? And I have checked the cash book and I found he paid me £12,000. And I said, thank you very much. You paid £12,000, so you are not my asset anymore. I'm going to remove your name from the system now. I will make you credit. So as soon as I make him credit, he will be removed from the system. This is the reason sales ledger control here, it will be credit, not debit, because he already paid. Remember, I'm telling you again, cash book means is already done. Cash book means is already done. Cash book means it's not pending. Nothing is pending. So trade receivables £12,000 means he already paid. So if he already paid, he is not your asset anymore because he paid to you. He is not your asset anymore. He is not your debit anymore. You need to remove him. So before you said he's a debit, now you need to make it credit, so he'll be removed from the system because he paid. He's not your asset. Same for the purchase ledger control. If it's purchase ledger control, you don't make it credit, you make debit because we already paid to the supplier. That's not my liability anymore. Okay, then we have a cash sale. Cash sale is income, 3,000. That is my credit. Cash sale is income. Rental income is income. Rental income is income. That is £500. That's my credit. All right, any question from here? But very careful with the sales ledger control. Please remember that in the exam, otherwise you will make a mistake. Remember, when the posting from the cash book, you make sales ledger control credit, not debit. But as I said, I'm going to send you a separate note for all of this book. It's going to be easy for you, but you need to understand the logic why the sales ledger control is sometimes debit, sometimes credit. If you understand the logic, you can answer it correctly. But if you don't understand the logic, if you just try to memorize it, you will end up with the wrong result. So don't memorize, try to understand the logic, why sometimes it is debit, why sometimes it's credit. Okay, so this one we have done, cash book, book of prime entry, book of prime entry. So we take everything. If they said part of general ledger, we don't take the cash and bank. All right, so let's move on. Move to the next question. The next question we have here, they said posting from the cash book, again same thing, cash book debit side, but this time they said it is a part of general ledger. This time this is a part of general ledger, part of general ledger. So what we'll do here, if this is a part of general ledger, what are you going to do if this is a part of general ledger? If this is a part of general ledger, we ignore cash, we ignore bank. Don't take these two because this two is already included on the book of prime entry, and this is a part of general ledger. So this is step number 2. Step number 1 is already done. So remember that there is explanation here why. So you can always remember that. So here you can see that in many business, the cash book is treated as book of prime entry and the part of general ledger. This means that for the receipt, the cash book is itself debit side of the cash account and of the bank account in the general ledger. The effect is that there is no need to post debit entry from the cash and bank column to the general ledger. So some business, they don't have to separate book. They keep in same book, like same book for the part of general ledger and part of book of prime entries. So obviously you don't have to do it separately. If you post one, that will be fine. So there are no separate cash and bank control account in the general ledger. The analysis column are posted as normal. So you don't have to understand, to be honest, all of this. All you need to remember, remember that no posting is required for the cash and bank column. The only entries you therefore need to make in the general ledger is the credit entries for the analysis column. This makes sense because the debit entries from the cash book and the bank column already included in the general ledger. So if the question said this is a part of general ledger, that means bank and cash already included. You don't have to take it again. Okay, let's do that. We're not going to consider this time cash and bank. We only consider all of this. Let's do this one together. VAT, cash book debit side. VAT is 600. Debit or credit? VAT is 600. Cash book debit side. Debit or credit? Credit, because it's a liability. Very well done, Sadia. Very well done, Sharon. Yes, it is our liability. That's our credit. Then next one, trade receivables, that means sales ledger control, 12,000, sales ledger control, debit or credit? Credit. Very well done. Very well done. Next one, cash sale is income. Cash sale is the income, that is £3,000. That will be our debit or credit? Very well done, Sepi. Yes, that will be also our credit. Very well done, Evelyn. This also credit. And the last one we have rental income. Rental income is income anyway, so it's a credit. 500. That's it. All right, let's move on to the next one. What is the next question we have? We have here another question. One of the bank receipt to trade receivables was from K score 300. So we have a one trade receivables. So we have a one credit customer. His name was K Scott and he paid us £300. So what will be the entry in the sales ledger? Sales ledger means the individual ledger, isn't it? So you're going to write his name, K Scott. He paid to us £300. If he paid to us £300, I'm going to make him debit or credit. Here's my sales ledger control. Here's my credit customer. If he paid to me, I'm going to make him credit. Very well done, Evelyn, because normally here's my debit. But if you paid to me, I'm going to make you credit because he's not my asset anymore. He paid to me. So let's say he purchased from me £1,000. So sales ledger control 1,000. Now he paid to me, before I said you are debit. Now he paid to me £300. I said sales ledger control 300 credit. So the new balance will be 700 from him, debit. Very good. Let's move on. The next book we have discount allowed day book, posting from the discount allowed day book. So let's move on. Posting from the discount allowed day book. Okay, discount allowed day book. So on the discount allowed day book, we can see how much discount we given to our customer. So we cannot receive the discount. We give the discount to our customer. On the discount allowed day book, we only recorded the amount of discount we're giving to the credit customer. Remember that we cannot receive the discount. We can only give the discount. So my first question is, if I give the discount, so discount allowed will be income or expense for me. If I give the discount to my customer, so the discount will be income or expense for me if I give the discount to my customer. So if I give the discount to my customer, that will be my expense. If I give the discount to my customer, that will be expense. Very well done. If this is my expense, then discount allowed will be debit or credit. If discount allowed is expense, then discount allowed will be debit or credit. Evelyn, how come discount allowed will be credit? If I give a discount, discount allowed is expense, and expense is your debit, isn't it? If you remember your debt, D-E-A-D, isn't it? Debt. And on the debt, you have a E for expenses, isn't it? And if the expense has gone up, this is your debit, isn't it? So if you give a discount to your customer, is expense for you, and expense is a debit. So expense will be debit, so discount allowed will be debit. Yeah. Now the next question is, if you give the discount, you also give the discount on the VAT as well. So for example, if you say the normal price is £1,000, this price is £1,000, I'll give you a discount £200. So you actually pay me £800. So you're going to calculate VAT on 800, 20% VAT, not 1,000. Remember that. If you give a discount, you don't pay VAT on the full amount. You pay VAT on the net amount. Whatever customer actually going to pay you, you calculate VAT on that amount, not the list price. List price means before any discount. You don't calculate VAT on the list price. You calculate VAT on the net because this is the money actually paid by the customer. So your VAT will be also debit, because you're not going to get the full amount from the customer because you are giving discount. So on the discount, obviously VAT also debit, because you're going to claim the VAT back from HMRC, because you're not going to receive the discounted amount, because discount is kind of free for the customer. The customer not going to pay the amount you give discount. And actually you give the discount rate 500. So basically you give discount £600, and out of 600 you give 500, and £100 was for the VAT. So let's do that. So discount allowed amount 600, sorry, 500 is actually you paid discount. So 500 will be debit. VAT will be also 100 debit, because VAT is also expense for you when you give the discount. Now, my final question is, because of the discount you're giving to the customer going to pay you more or less? If you give discount to your customer, the customer going to pay you more or less? The customer going to pay us less. If the customer pay us less, my sales ledger control will be go up or go down? My sales ledger control balance will go up or go down if I give the discount. So my sales ledger control balance will go down. If my sales ledger control balance goes down, then my sales ledger control will be debit or credit? If my sales ledger control, the customer balance goes down, it will be debit or credit? That will be credit. Very well done. Very well done. Sales ledger control is normally debit, but if I want to decrease it, if I want to make it down, I make it credit. So sales ledger control, £600 will be credit. So that means £600 credit customer will not going to pay me because I give them the discount. So I'm expecting £600 less from my credit customer. All right, this is from the discount allowed book. You can see it. But as I said, there's a lot of book. It's going to be difficult to remember. There's the next chapter is full of book. So we have to make sure we're happy with that. Obviously need a lot of practice as well. Okay, the next one we have, there's another question. One of the entries in the discount allowed book for a credit note sent to K. Smith 20 plus VAT. So I'm sending a credit note. When I send a credit note, when someone returns to me, I send a credit note to them. So if any customer returns to me, I send them a credit note so that they can pay me less money. 20 plus VAT. What will be in the entry in the sales ledger? K. Smith. Sales ledger, so I'm writing the name K. Smith. How much will be the amount? 20 plus VAT. So 20% is the VAT. So that is 24. 20 plus 4 is a 24, isn't it? So 24. And because of the discount, this person K. Smith going to pay me more or less? Here's my sales ledger control. Here's my asset. If I give a discount, he's going to pay me less, isn't it? So I'm going to make him what? I'm going to make him debit, or I'm going to make him credit? I'm going to make him credit. If I make him debit, Nehal, then he will be increased, because sales ledger control is normally is a debit, isn't it? If I said you are my debit again, that means I'm adding debit plus debit is a plus. If I give a discount, I'm gonna reduce the figures. If you want to reduce it, I'll make him credit. Yes, Nehal? So I'm going to make him credit, so he will pay me less money. Debit and debit like a plus plus, and debit and credit like a plus and minus. So I'll make him credit. All right, very good, very well done. So let's move on. This is the end of the chapter. Let's move on to the next chapter. Next week we're going to complete the book. We have only like few chapters left. Hopefully next week we're going to complete the book. So from this week, make sure you do some practice, because once we finish the next week, the class, then you're gonna do a revision class week after, and we'll be ready for the exam week after. So maybe we're expecting the exam in 1 to 3 weeks time. So 3 weeks time, we're gonna set up the exam. Okay, double entry for purchase and trade payable is the opposite of the chapter number 9 we have done. So let's have a look. some very basic thing at the beginning. We already know all of this. We don't have to revise all of this. Let's move on. This time we're talking about purchase day book. So last time we have done posting from the sales day book. This time we talk about the purchase day book. Now my first question is, on the purchase day book, what type of purchase we record? Cash or credit purchase or both? What type of purchase we record? Cash purchase, credit purchase, or both? Remember, yes, very well done, Evelyn. We only record the credit purchase. On the purchase day book or on the sales day book, we never record any cash transaction. We record only the credit transaction. So we record only credit purchase. My next question is, the people I have here inside, Edie, Edith, Amber, and John, who are these people? They are my credit customer or they are my credit supplier? Who is these people? They are my credit supplier. Very well done, Sharon. They are my credit supplier. Very well done, Fatuma. Very well done, Banu. Yes, they are my credit supplier. Very well done, Muriel. So if they are my credit supplier, they are my asset or they are my liability? They are my asset or they are my liability? They are my liabilities. Yes, they are my liability because I have purchased, I buy something from you and I said I'll pay you later. So I'm creating the liability. If this is my liability, so all of these people will be debit or credit for me. If they are my liability, I have to pay to them. So they will be debit or credit for me? They will be credit for me because they're my liability. Very well done, everyone. Yes, they're my liability because I have to pay to these people. So all this ED, Amber, and John, all this total balance, they are my liability. They are my credit. Okay, we understand this one, the sale purchase ledger. The next question I have, that is, all the purchase ledger, like all this supplier together, we have a name for them. What do you call them? We have a name for them. Total supplier account. We call them PLC. Very well done. Purchase ledger control. Purchase ledger control. So the same way we said sales ledger control, all the credit customer. So all the credit supplier, we call them purchase ledger control. So purchase ledger control means all the credit supplier are there. When I said the purchase ledger, I'm talking about one supplier. When I said purchase ledger control, all suppliers. Yeah, purchase ledger is one supplier, purchase ledger control is all the supplier. All right, so that's fine. The next question is how we record the journal. So when you buy something, remember, when you buy something, purchase is always debit. Purchase is expense, purchase is always debit. When you buy something, the VAT is always debit. VAT is also debit because when I make a credit purchase, I'm going to claim the VAT. So VAT is expense for me, and obviously VAT is also debit. When I make a sale, VAT is credit. When I purchase something, VAT is debit. And when I make a credit purchase, the purchase ledger control is always credit because that's my liability account. All right, so let's do the question now. Let's write it down, this figure here. So we have a Edith, that is 4020. We have ED, that is 4728. We have Amber, 5100. We have John, 8778. We have a total 22,626. We have VAT 3771, and we have a net 18,855. All right, so let's move on. Let's do this one now. So the first one we have purchase ledger. Purchase ledger means the individual ledger account. We have to say about every single supplier, the way we did for the sales ledger, every single credit customer, purchase ledger, every single credit supplier. So I'm going to write here ED, EDDI, ED, then Edith, ADITH, then Amber, then John. I'm going to write the amount 4020 4728 5100 and 8728. Now my question is, I'm going to make them debit or credit? They are my credit supplier and they're my liability. So I'm going to make them debit or credit. I'm going to click all of them credit. The way we did for the sales ledger debit, I'm going to make this one is everything credit here. Very well done. Then we have here for the general ledger, this is the total. So how much was the total purchase I have? So I'm going to write total purchase, that is 18,855. Then I'm going to write the VAT, that is 3771. And I'm going to write the total, that is purchase ledger control, 22,626. So that means how I created all this supplier, how I created, I make a purchase, credit purchase. So my total purchase was 18,855. So that's my expense. When I buy something, purchase is always expense. Then VAT, when I buy something, I also need to pay the VAT. So that's also my expense. Then purchase ledger control, I didn't make the payment for that. So that's my liability. I have to pay all this money. So that's my liability. So let's do this one. The first one, purchase. Purchase will be debit or credit? Purchase will be our debit. Very well done. Purchase will be debit. Then we have VAT. VAT will be debit or credit? Very good. VAT will be debit. And the final one, purchase ledger control. Purchase ledger control will be debit or credit? Purchase ledger control will be credit. It's a liability account. Very well done. Why VAT debit? Why VAT debit? Because when you purchase, okay, I'll tell you, maybe it will be good for you. So when the liability goes up, then it's a credit. When liability goes down, then it's a debit. So VAT is a liability for us when we make a sale. When you make a sale, we collect the money from the customer. For example, if I charge one customer £120, out of 120, 20 for the VAT and 100 for us. We make a sale to the customer give us £120 and £100 for the sale, £20 for the VAT. So this VAT ultimately we need to pay to HMRC. So this is our liability to pay to HMRC. So that's why this is a credit. So when you make a sale, then VAT is a credit. On the other hand, when you buy something from the supplier, purchase, then let's say I paid 120. So 20 for the VAT, 100 for the purchase. Now this VAT, whatever I'm paying, total I'm paying 120, but this VAT, £20, I'm going to claim back from HMRC because I paid VAT. If you paid the VAT and if you're a VAT registered business, you can claim it back. So that you can claim this back 20 from the HMRC. How does it work? I'll tell you. So when you make a sale, we called it output VAT. Output VAT means how much is VAT is due to HMRC. Let's say your output VAT is 100. So you are about to pay £100 to HMRC. When you purchase and pay VAT, we called it input VAT. Let's say your input VAT is 20. So you paid VAT 20. Ultimately, you pay HMRC the difference, output minus input. So actually, you're paying to HMRC £80, not 100. So this 20 is expense for you, you'll claim it back. So your liability will goes down by £20 because you paid VAT for the purchase. So when liability goes down, this is your debit. When liability goes up, this is your credit. You understand it? All right, so we move on to our next question. Okay, this one, all right, yeah. We've done it, isn't it? Okay. All right, so move on to the next one. The next question we have here, that is purchase return day book. This is the same way, but we do opposite. Purchase return day book, this means this time I'm going to return to my supplier. This time I'm going to returning to my supplier, credit supplier. So you can see here, when I'm returning to my credit supplier, I'm writing the credit note number. Credit note number means I'm returning to my supplier. So let's have a look. How much you're returning? So that's my purchase ledger and the general ledger. Let's have a look if you can see it. We need to write it down, all the information here. So let's write Jacob. Jacob is 408 is the total. VAT is 68 and net is 340. Mandy is 48 total. VAT is £8 and net is £40. Then clearance is 816, 136 for the VAT, 680 for the net. All right, so I have a total. Total is 1272. VAT total is 212, and the net I have 1060. That's fine. This time I'm following the purchase return day book. Purchase return day book. Purchase return day book. So purchase ledger, individual ledger account. So I'm going to write this one, Jacob 408, then Mandy 48, and clearance, that is 816. Now this is a purchase return day book. Now the question is, I'm going to make them debit or credit this time. So basically they are my supplier and I'm returning to them. It was my liability before. Now I'm returning to them. If I return to them, my liability will be finished, isn't it? If I return to this supplier, I'm not going to pay any money to them because I'm returning the product. So I'm not going to pay. I'm not going to say it's my liability. I have to remove my liability. So normally my liability is a credit. If I want to remove it, I need to make it opposite. So I need to make it debit, because if something is credit, if I want to remove it, I make it debit. So I said debit, debit, and debit. And the next question we have, that is general ledger. On the general ledger, what we do, we need to write the total amount, isn't it? So this time, the purchase ledger control, then VAT, and purchase return, isn't it? So purchase ledger control is the total amount, 1272, VAT is 212, and purchase return, that is 1060. Now the first question is, because of the return, I'm going to pay more, I'm going to pay more money to the supplier or less money. So if I return to my supplier, I'm going to pay them less money, isn't it? If I return to my supplier, I'm not going to pay like the full amount that I have purchased. I will pay less money. So normally my purchase ledger control is a credit. If I want to reduce it, I want to make it down. So what I'll do, my purchase ledger control will be what? Debit or credit? My purchase ledger control will be debit. Why? Because I'm going to pay them less money. So this amount I'm not going to pay to my supplier. So I'm going to minus it. So minus means debit, because normally purchase ledger control is a credit. I want to reduce it, I make it debit. The next question is the VAT. I was claiming this VAT before. I said that's my purchase, I claim the VAT. But when I return the product to the supplier, I cannot claim the VAT because that's not my actual purchase anymore. Because when I buy something and I said, oh, that's my purchase, I claim the VAT, and after a few weeks I return the product to my supplier, it doesn't work, isn't it? Because I cannot claim the VAT, that is not actually purchased for me at all. So I have to make it the opposite. So whatever the VAT I have claimed, I was said this one is before debit. Now I will make it credit, because that is not my actual purchase anymore because I returned. Then the purchase return. Purchase is debit, purchase return is always credit. Remember that. Purchase return, like purchase is expense, that's a debit. So purchase return is always credit. All right, so this is the one from the purchase return day book. Let's move on. Let's have a look what we have here. Then we have here, I think, the cash book. Yes, so we have cash book, but this time the cash book is credit side. This time the cash book is credit side. Cash book, credit side. Now again, I have to remember this one, book of prime entry or part of general ledger. If there is a book of prime entry, I'm going to take everything. If there is a part of general ledger, I'm going to ignore the bank and cash. You have to remember that. So I'm going to take everything. This time is a cash book credit side. Cash book credit side is all about money out from the business. So this time, this cash and bank is not in, it's not asset, asset is going out. So that time it's not going to be debit, it will be our credit, isn't it? So you're going to say cash and bank. This time is a credit side, so that means we paid cash 1920. We paid from the bank 8,300. So it will be debit or credit. That will be our. This time cash and bank will be our debit or credit. We are paying is the cash book credit side. So when you paid, if the asset is going down, that will be our credit. Very good. This time it is not asset. It's very, very careful which book you're following. Then after that, we have a VAT. This time VAT on the credit side, that means I paid the VAT, 320. If I paid the VAT, that's expense. That's not my liability. I paid the VAT, so it's expense for me. So that will be our debit. If I pay the VAT, that is expense for me. That is our debit. Now the next one is trade payable. Trade payables means purchase ledger control. Purchase ledger control. Trade payable means purchase ledger control. Now my question is, it will be debit or credit here? I paid to my supplier. I paid to my supplier. Very, very careful, please. I paid to my supplier. Already paid. So my liability will go down, isn't it? I already paid. So my liability goes down. So that's not my credit. That will be debit. It is not my credit anymore because my liability will go down if I pay to my supplier. Very well done, Evelyn. Okay, then I have a cash purchase. Cash purchase, any type of purchase is expense. Cash or credit doesn't matter. 600. So this is my debit. And the bank charges. Bank charge some money to me. Bank charges also expense. Bank charges 300. This is my also debit. All right. So the next one we said, one of the bank payment to a trade payable was Che Henry for 500. So we have a trade payable, that is one credit supplier, trade payable, J. Henry. We paid £500 to him. What will be the entry in the purchase ledger? Purchase ledger means the individual account, so I'm going to write his name. I'm going to write J. Henry. And I'm going to write 500. And I'm going to make him debit or credit. I paid him 500. He was my liability. I paid 500. I'm going to make him debit. Very well done, because I paid him, so my liability will go down. That's my debit. Very well done. So move to the next one. Posting from the cash book rate side, but this time this is a book of part of general ledger. When this is a part of general ledger, I don't take the cash and bank. Remember that. When this is a part of general ledger, I don't take the cash and bank. So I only take VAT, then purchase ledger control, cash purchase, and bank charges. And all will be our debit. The same thing we done before. The Henry 500 debit. Only here the difference is I don't take the cash and bank because this is a part of general ledger. Okay, let's move on to the next question. Let's see what new we have here. Discount receipt book. Let's have a look at this one. Discount receipt book. Posting from the discount receipt book. Now this is the opposite of the discount allowed book. discount received daybook is all about how much discount we have received from our supplier. Because before we said we give the discount to the customer, this time we receive the discount from the supplier. Remember, if we receive the discount, it's come to the discount received daybook. If we allow the discount to the customer, it goes to the discount allowed daybook. If we receive, discount received daybook. Okay, so how much discount we receive? 600. Inside of the 600, there is a VAT and there is a net. The first question to all of you, if I receive a discount, is it income or expense for me? Discount received. Is it our income? Very well done. If the discount received is our income, then it will be our debit or credit. Income is always credit, isn't it? Income is always credit. So if there is a discount received, that's our income, then that will be always credit. So discount received is always credit. Then we have a VAT. Remember, if we receive the discount, we also receive discount on VAT as well. Because let's say if the total price is 1,000, and if I said you don't have to pay 200, just pay 800. So on the 200, obviously I had to pay some VAT, so I'm receiving some discount. So I also get discount on the VAT as well. Because of the discount, I pay less VAT. So VAT is a part of income as well. So because I'm not paying the VAT because of the discount, so VAT is also part of the income. So VAT also credit. And the final question is, because of the discount received from the supplier, am I going to pay more money to the supplier or less money to the supplier? Because I received some discount from the supplier. So I'm going to pay less money to the supplier. Now, if I pay less money to the supplier, my purchase ledger control will be debit or credit. If my liability goes down, if my liability is reduced, my purchase ledger control will be debit, opposite. Very well done, Tamir. Very well done, Nehal. Yes, that will be our debit. So you're going to say discount received 500, credit, VAT 100 credit, and because of the discount, I'm going to pay £600 less to my supplier, so that will be our debit. All right, so that's it from the discount received table. Let's see if anything else we have. Okay, so we have another question here. Let's read this one. One of the entries in the discount received table for a credit note received from R. Jones for 20 plus VAT. What will be the entry in the purchase ledger? So they're asking, we receive a credit note from a person named R. Jones. If we receive a credit note, I'm going to pay you less money, isn't it? If I receive a credit note, that means I return something. I only receive the credit note when I return something. So I return to you and you give me the credit notes, that's so that I can pay you less money. And it's a purchase ledger, I'm going to write the name. So R. Jones, 20 plus VAT, isn't it? 20 plus 20% of the VAT, that is £4. So £24. So £24, I'm going to make it debit or credit because he's my supplier and he sent me the credit note. Now I'm going to make it debit because I'm not going to pay you this £24 because I'm going to get the discount for that. Debit. Very well done, Banu. So we'll move to the next one. Let's have a look. Is there any question left? No, this is the end of the chapter. So this is the end of the chapter number 10. So we'll move to chapter number 11 next week, 11 and 12. We have two more chapters, chapter 11 and chapter 12. So chapter 11, I think it is a petty cash book. And chapter 12, we have trial balance. So these two chapters we're going to do next week. But as I said, this week I'm going to send the summary for all of these moving from the day book to the posting to the general ledger. So on this summary, you will find all the book and posting to the general ledger in one page so that you can see from which book how to post. It will help you to revise very quickly. This is number one. And number two, I'm going to send you the question bank. The question bank will be exactly like a book. And from the back of the question bank, we have some practice question. I want all of you to practice this question. I'm going to send this one so that because next week we're going to complete the book and you need to practice some exam type of question. Because after next week, we're going to do one class for the revision. So I'm going to bring one exam question. I'm going to bring one exam question. So the question you're going to see in the exam exactly look like this question. And we're going to solve full 100 marks question together. So slowly, very slowly, we're going to practice the whole question. We'll try to be clear on everything so that week after when you do the final exam, you will understand everything. So once we do the final exam, once we pass this paper, then we're going to move to the next module that will be bookkeeping control. So we're going to start our next module, bookkeeping control, once we completed this one. So next week will be our final class. Then week after will be the revision. Then we're going to do our final exam. Then we're going to start our new module that will be bookkeeping controls. This is the plan. And the exam will be in the center. If you live nearby to Park Royal, you can do exam there. If you live in Barking, close to the East London, you can do the Barking. But I will send you email to everyone. So you need to confirm me which center you want to go. I'll send you the timetable, where you can come, how you come. I'll tell you everything. So don't need to worry about the exam right now. We have still 2 weeks. I'll tell you everything. If you haven't done registration with the AAT, make sure you did it. Some of you, if you still didn't do the registration with the AAT, because without AAT registration number, you cannot do the exam. So make sure you have the AAT registration number. And after next week, I'm going to send you, not next week, like after the revision class, I'm going to send you the email. I'm going to tell me which center you want to go. I'm going to give you a specific day. Most likely you're going to do exam in Barking. That will be Monday evening, the same time what we're doing here on the class. Not doing the class, we'll do the exam there. If you live close to the East London, you can come there. And if you live to the west, then you can go to Park Royal. I'll send you the timetable, timing. You can book your exam. You can go there. All right, and before that, you need to do a lot of practice. Of course, like I'm going to send you the practice question. You do as much as possible. If you haven't started your revision, if you haven't started the book reading yet, you still will have enough time. If you start from today, I would say still you have enough time. If you start reading from today, still you'll be fine. So if you just quickly revise your book from the very beginning and the question bank, I'm going to say start practicing from there, you'll be absolutely fine. Nothing to worry about it. Okay, Luis, if you're not, then send me an email, Luis. I'm going to send you the way how to register with the AAT. Hopefully it's not a big deal. You can call to the AAT as well. They can help you as well if you cannot register. But I have steps how to do the registration. They should find the KBM. If you write KBM, you're gonna see this one there, like KBM training and recruitment. All right, Peter, that's not a problem. Once you come back, you can do your exam. If you're not in England now, when you come back, you can do your exam. So once you come back, you can let me know, like Sajid, I'm here, so I want to do my exam. I can set up the exam for you, not a problem for that. All right, so any more questions? No? Very good. So, okay, so result of how to register. Yes, I can. If anyone need how to register with AAT, send me an email. I'm gonna send you the way, the steps, so you can follow that to register to AAT. If you need any help, you can tell me. I can do that, and otherwise, like you can call AAT. They also help you. Manthu, if you just send me an email, like if you have my email, is fine. If you just send me an email and said like you need the book, I'll send it to you by email. It should be fine. Of course, SEPI, you should have a center everywhere. If you live anywhere in England, you'll get an AAT center. Just type AAT center in Hertfordshire. You're gonna find the center there, close by your home. Louis, all you need to do, you need to look at the recorded video, of course, like only you can cover from there. Yes, the exam right now you can do only Park Royal and the Barking, because our Elephant and Castle branch is closed because the building is closed because of the COVID-19. I can send you the link, Mohammed, but you need to email me. You need to email me, like send me the